Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research Incorporated, a registered broker-dealer, member FINRA SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Financial planning services through Andover Advisory Group, a registered investment advisor. Cambridge and Andover Advisory Group are not affiliated. Cambridge does not offer tax or legal advice.
Good morning, Justin. I want to thank you for your hard work. The information is a big help, and I appreciate what you did. Enjoy the show.
All right. Thank you.
Okay, that's great to know. Thank you for the information.
You're very welcome.
Okay, Jeff.
Okay.
Thank you very much.
You're very welcome.
You're right on the money, Jeff. How are you doing this morning? Thank you.
Well, those are good questions. Hopefully that helps.
Yes, thank you so much.
You're very welcome. You're going to hear stuff here that you don't hear anywhere else on radio.
And you don't forget it.
Welcome to another edition of Talk Money. Thanks for tuning in. If you are joining us for the very first time, allow me to introduce myself. My name is Jeffrey Shank. I'm a chartered financial consultant and owner of Andover Advisory Group, a registered investment advisor founded in 1996 with just one goal in mind, and that's to provide objective financial advice. We do the show here weekly, where it's designed to provide some ideas, tips, suggestions on how to improve your overall personal financial picture. And ultimately, what we're trying to do is improve your money IQ. So welcome all. Thank you again for taking the time to join us. I think we got some good stuff to talk about today. We're going to take a look at, we didn't have a show last week because of Labor Day. And usually the beginning of the month, we'll just take a look at how the markets did in the previous month and kind of do a check on where we are economically speaking. And we didn't get a chance to do that because of Labor Day. And so I want to just do that review this morning, as well as I saw this chart on the travel industry, Lou.
Yeah.
And as I do from time to time, I'm always thinking about potential investment opportunities. And I saw this chart on the travel industry and the devastating effects of COVID-19. And I was thinking, is this the time to be thinking about maybe, is there possibly an investment opportunity there in the travel industry? So we're gonna take a look at that, take a little bit closer look. And then we've got this week's Talk Money tip, which is all about like-kind exchange. And so if you're a real estate investor, that's to say you're investing in properties for investment purposes, they're rental properties, that sort of thing. You definitely want to hear this week's Talk Money tip.
Excellent.
But let's get started. I want to take a look at what happened in the month of August and year to date in the markets. And I've got a slide, Lou. I don't know if you've got that up yet.
Here we go.
There we go. All right. So let's just, I guess, the markets continue to have a good year. The major market indexes, S&P 500, NASDAQ, Dow Jones, those are the ones you hear reported on all the time, up anywhere from 15.5 to 20.5% so far year to date. Last month, the NASDAQ was up 4%, just having a bit of a hard time this summer, but recovered a bit in the month of August. The Dow was up 1.25%. The S&P 500 another 3%, and we're hitting and almost daily these all-time highs in the markets. And then the Russell 2000, if you can see that on the chart, the Russell 2000, a lot of people don't hear about that much, but that is a subset of the U.S. stock market, and it's 2,000 stocks, probably nowhere near that number, but that's what they call it, the Russell 2000.
Yeah.
And it represents the smaller companies. publicly traded, obviously, companies in the U.S. stock market. And just so that we all understand, we're not talking about the local grocery store. We're talking about companies that might have a $2, $3, $4, $5 billion market cap. So
Right.
these are small when you compare them to the Amazons and the Apples of the world. And so that
The
actually
growth
has,
companies, right? Companies that we might be looking to see some growth from.
yeah, typically smaller companies. Well, they're obviously a little bit more risk. They're less followed by analysts. So if you're going to be investing in smaller companies, you have to do a little bit more homework. And they tend to, as you said, have a lot of growth potential because that's what they are, right? They're companies that went public not too long ago, and they're trying to grow their market share, grow their business, and so they have the potential. And in fact, historically speaking, the small cap indexes have outperformed the larger ones, except in the last few years, largely because of those companies that we talked about in the past, like Amazon, like Apple, that have continued to outperform the Googles of the world.
Yeah.
That have continued to outperform in the mostly technology companies, basically, and have grown quite substantially. And so when you look at those numbers, Lou, year to date,
Yeah.
I was thinking, what, sell in August and go away?
Well,
That's a pretty good year.
yeah.
It doesn't rhyme. I know it doesn't rhyme,
No, but
but could it make sense?
it seems to. I don't know. It seems like we're on the edge of something, but I don't know. The market keeps chugging.
Exactly.
Yeah.
It has kind of sputtered first week or so of September. We actually are down so far. Not a lot, but we are down in those same indexes so far this month. So you wonder if maybe something's happening here. We moved down. We should mention too that when you look at the whole world, as represented by the global Dow index, it's up 16.5% so far this year. 2% increase in the month of August. And I should mention too that this includes the U.S. stock market
Oh, okay.
as well. So it's not just foreign companies. It's the whole the world stock market.
But there are a lot of economies that are still burdened fairly significantly by COVID. Yeah.
By COVID,
Yeah.
sure, yeah. And still, I mean, everywhere you look, the stocks are performing and performing well. And we look further into this chart, we can see the Federal Reserve continues to keep its low interest rate policy in place, with no talk about increasing interest rates, short-term interest rates, but more and more talk about what they're calling taper.
Oh.
Where they are going to eventually slow their bond buying policy. And so the Federal Reserve has some tools in a toolbox to stimulate the economy, in a way, putting money into the economy to help it to grow. One way is by making money cheap so that everybody can borrow it and spend it at a very cheap rate. Right now, again, that's 0 to 25 basis points, 1/4% target rate for short-term borrowing. And then they can also go into the market and buy bonds, which creates a demand, which pushes the yield down because it raises the price. So they have a couple of tools that they employ, that they have been employing, very much so since the financial crisis in 2008. And there's talk that they will, at some point, maybe even before the end of this year, start to slow that down. And there are more and more Federal Reserve Bank Federal Reserve banks that are echoing that possibility. So
is that an inflation driven decision? In other words, that kind of riding out how transient this current inflation is?
yeah, so it depends on who you talk to, who you listen to, what person is discussing this as representing the Federal Reserve, but their mandate is full employment and reasonable inflation. And so they've set those targets, they've communicated those targets, and when they hit those targets, they'll start to back off. They'll take their foot off the gas pedal, so to speak.
Right.
And again, that more and more, there's talk that might happen before the end of the year, a taper.
Mm-hmm.
But I saw a stat this morning, and it probably won't mean anything to anybody that's listening to this right now. But the total balance sheet of the Federal Reserve, total asset value on the Federal Reserve's balance sheet, is $8.5 trillion.
Wow.
So
Wow.
I remember not too long ago when it was 4 trillion, and they were saying, how is that ever gonna work? So they put they just out of thin air, Lou, just to I mean, they don't even have they don't own assets to back up these purchases, right?
Right.
But they have created, essentially, by buying bonds either from the U.S. Treasury, in some cases some mortgage-backed securities, collateralized securities, a total of $8.5 trillion.
That's 2 years of GDP, isn't it?
No, it's roughly, well, it's a little bit less than half of
Okay.
GDP,
All right.
which is still a big number.
Yep.
Yeah. No, so GDP is in the I think $18 trillion range.
Oh, I was
believe.
thinking national budget. That's what I was thinking. That was
Oh, national budget.
No, I said
Yeah.
GDP, and I was
Yeah.
thinking GDP, but I was thinking the
Oh,
national budget is about
budget.
4 trillion, or
Yeah.
a little less than 4 trillion.
Well, actually, it's funny you should mention that, because I do have some budget numbers. But before we get to that, the bond market, when we take a look at the bond market, which is influenced obviously by the Federal Reserve, interest rates did start to climb early in the summer, but backed off significantly for whatever reason. And as of August 31st, we're at 1.3% yield on the 10-year. To put that into context, we were below 1% at the end of last year. So it is a little bit higher, but significantly, historically, at a very low level. And the dollar has gained strength. The U.S. dollar has gained strength, primarily because the economy is recovering at a fairly good pace. And if you were thinking that gold might be an inflation hedge, and that there might be some inflation worry, you couldn't tell by looking at gold prices.
Right.
Down 4% so far this year. So if you believe that gold is an inflation hedge, and you're concerned about inflation, then looking at this number, this price of gold, doesn't look like there's a lot of concern about inflation.
Not when the market is roaring the way it is, right?
Can I clarify for me? What do you mean?
Gold is not necessarily a strong alternative when the market is going as well as it's going.
Oh, I see what you're saying.
Yeah.
So it's a flight to safety. A lot of times, if there's some world event and people get concerned, like a 9/11 event, for example, people move to safer investments, gold being one of those. But generally speaking, most economists will tell you that gold is really follows the inflation, and typically performs according to overall inflation. So I think I just noticed that if I move this, that moves the
Oh,
the chart, huh?
first time we've seen that.
Yeah, I gotta stop doing that.
All right, let's talk about the oil number because this is important.
Yeah, so we did see oil prices start to go up, and obviously you probably noticed that the impact of that in the price of gasoline, but it has again backed off in the last couple of months or so, substantially, but still up 40% year to date. But that has everything to do with COVID. Everything to do with COVID.
Really?
There was a time. Oh yeah, it was the strangest thing. I'd never seen anything like it. But if you recall, we were on the show. We're talking about it. Given the price of oil futures, and even the spot price of oil, the people that owned and controlled either a futures contract or actually owned the commodity were willing to pay you to take it.
Yeah, I remember.
Remember you talked about the possibility of people opening up their swimming pools, and taking delivery of crude oil. So that it has everything. The
demand was down.
Demand was non-existent. Yeah, and so prices plummeted. And so that's why they got to where they were, even at the end of last year, less than $50 a barrel. So the range that it's in right now is probably a little bit more normal. And
all right, so let's talk about this in practical terms. I've got my propane tanks, and I'm going to decide whether to fill them now, before the winter when prices normally go up, or do I ride this out because things coming down?
So there is some correlation between
I understand
crude oil prices and propane.
Yeah.
And propane is not the same as natural gas, but they're obviously all connected in some way. But what I do know is that natural gas prices have spiked recently.
Mm-hmm.
Does that have any influence on the price of propane, to answer your question? I don't know for sure, but it's possible it will continue to go up. So you might want to take advantage of. I would look at it, Lou. Take a look at the price of propane. And
there's like any heating oil, there's a natural increase as we get into the winter here in New England. So
right, yeah. And for some reason, and probably again COVID related, that is to say, the recovery, the demand is going up. Production was probably down, and now it's they're trying to catch up with that demand, that increased demand.
Yeah, that's always a factor in these prices too, right? Because they play the games with demand in terms of production, and
of course
it doesn't correlate exactly because there's ramp up time on production when they need to increase production. They can shut down immediately, but they need time to ramp up.
Right. Or you could just go solar.
I've been thinking about it, actually. It's just I have to have someone out to the house, and I have to have a meeting, and I'm antisocial, so I don't know. I don't know how that's going to work.
But there are a couple of things that I did pull out of some of the economic data that I did want to mention. All right, and we were talking about the deficit, the Treasury budget deficit was $302 billion in July, just for 1 month. That's how much more we spent than we took in revenues at the federal level.
Yeah.
The June deficit was 174.2, and the deficit is 380% larger. So the July deficit is 380% larger than July 2020.
Wow. So
following the latest increase, the budget deficit through the first 10 months of the current fiscal year widened to $2.5 trillion, 10% lower than last year's deficit over the same period.
2.5 trillion. That's the deficit.
2.5 trillion. That's just the deficit. So we're adding to the national debt so far in the last 10 months, $2.5 trillion. Yep. Compared to last fiscal year, government expenditures have increased 4%, while receipts, though, have increased 18%. So it looks like we're starting to close that gap, but this is all distorted because of COVID. Keep that in mind. But they are talking about another 3.5 trillion of spending.
But the deficits after the financial crisis were about 1.6, 1.5 trillion. These are massive deficits.
They are. They are.
Yeah.
Yes. Consumer prices, July, personal income and outlays report. Consumer prices rose 0.4% in July. If you extrapolate that, that's about a 5% increase, right? Prices are up 4.2% since July of 2020. So that's year over year. And then according to the latest, if you were looking for something that might put a damper on the markets, inflation might be one of those. But there is another index or indicator that economists do look at, and that's the Conference Board Consumer Confidence Index, which declined in August and also declined in July.
Mm-hmm.
So apparently consumers are a little concerned. That did show up in some of the retail sales numbers that we saw. And the other thing that happened at the beginning of September, looking back at August, was the jobs report, and that was a little disappointing.
Yeah.
250,000, I think, was the number, and they were expecting anywhere from 700 to 900,000, similar to July's report.
Right.
So not as many people were employed or reemployed in August as they had anticipated. And that's not to say that there aren't jobs available.
Right.
It looks like the problem is a labor supply, not a jobs supply. In fact, there's more job openings currently than there are people who are unemployed.
Well, the end of the federal government assistance at the beginning here of September, it would be interesting to see what September's numbers are.
Yeah, so I think there's a lot of factors there.
Mm-hmm.
One of those is that, for the last several months, the last year or so, people have been getting paid to stay home. There's a lot of people who, for whatever reason, are still concerned about COVID. I think that's part of it.
Yep.
So there's a lot of reasons why people are not taking that job at this point in time, even though there are more jobs. I think it's like 10 job openings for every 8 people who are currently unemployed. And so, Luke, what that's doing is, and that the point I wanted to make is that is putting pressure on employers to give people incentives to come to work.
Yep.
And one of those incentives is wages.
Mm-hmm.
And so there's upward pressure on wages. And if you ask me what might be the thing that's going to cause an inflationary trend more than just a transitory inflationary period of inflation, I would say that it's wages.
Right.
And the one thing we know is that once wages go up, it's very hard for them to go back down again. So that upward pressure becomes more permanent.
Yeah. So that's going to, labor costs are going to feed inflation, and it's going to be for a significant period of time. You hire somebody at a certain price, you can't cut their wages that easily.
Right. Yeah. And so those things, again, if you were looking for some negatives and some negative impacts on the markets, those are a couple that I think are important and to keep in mind as you make your investment decisions. And along those lines, I mentioned that I saw a chart on the travel industry.
Oh yeah.
And was thinking maybe this is an opportunity. So I want to talk about that a little bit. But before we do, let's take a quick break, and a couple minutes, and then we'll come back and we'll. I have another chart. I have a chart for that too, Lou.
Oh, excellent. Great. We'll get that going during the break.
Okay. Stay tuned.
Whether you're saving money for your children's education, preparing for retirement, or deciding on the right life insurance plan, you can count on the professionals at Andover Advisory Group. Established in 1996, our company is responsible for providing financial planning services to individuals seeking sound financial advice. We create a comprehensive financial plan that serves as a framework for organizing the pieces of your financial life so that you can focus on your goals and understand what it takes to reach them. And a financial plan can help you prioritize. For example, how saving for college might impact your ability to save for your retirement. Having a clear perspective will allow you to pick the right strategies and confidently choose suitable products and services. Best of all, you'll have the peace of mind that comes from knowing that your financial life is on track. Call us at 978-691-5005 to book your free initial consultation. That's 978-691-5005. Hi, this is Jeffrey Shank, a chartered financial consultant and the host of the Talk Money Show. I've been helping my clients for more than 30 years, and now I'm going to help you. Join us to learn about the financial issues that concern you the most. You'll hear from the experts on a range of topics, get some great ideas, and it's all designed to help you make more out of your money. So tune in to Talk Money right here on Eagle News Radio.
Welcome back to Talk Money. Hey, if you want to get in touch with me after the show, best thing to do is to call the toll-free number, 877-475-2062. Or you can send me an email, jeff@talkmoneyradio.com. Or just send us a message right over Facebook. And if you have a specific question that you'd like to get answered, and we can do it on the show, we'll do that. Or if it's more personal and you'd like us to call you back, we can do that as well. And if you want to find out a little bit more about us and how we can work with you and your personal financial situation, we do offer a no obligation initial consultation. There's no charge for that. And it's an opportunity for us to get to know you. We can tell you a little bit about what we do. And if you have a specific issue that you want to go over, actually had somebody take advantage of that, came in, was a little worried about Social Security and
the decision on when to take it.
Not the decision on when to take it. Well, kind of a decision on when to take it, but more was thinking about maybe semi-retiring or cutting back a little bit, and was worried that by adding on 4 or 5 years of significantly lower earnings, how that might negatively affect Social Security.
Now, that's a big database over a long period of time with a lot of backloading of data. So I wouldn't think that 4 years would impact that too significantly. Actually,
well, you came to the right conclusion. Maybe a little bit
the wrong way.
Yeah, the wrong way, and really what it boils down to is with Social Security, they take a total of 35 years, not consecutively, 35 years of earnings. They average that out, but they make adjustments for inflation. So your 1970 wages, right, are brought up to 2020 standards.
That'll help.
Or inflation adjusted.
Yeah.
Right. In fact, your 1970 wages might actually be higher after they adjust it than your 2020 wages. And they take the best 35 years.
Oh, okay.
So it doesn't matter. So if you've got whatever you've earned so far, can't get any worse if you've got 35 years of earnings. It can only get better. It can't go down.
Yep.
Yeah.
Excellent.
So
that must have made them feel better.
Yes.
Yeah.
Yeah.
So now he's on a beach somewhere in the Cape, or
no, it's making the decisions to cut back on work and start enjoying enjoying life a little bit more. And
Funny,
no,
the
no,
most-
that wasn't the goal
Yeah.
to start vacationing. I'm sorry, I interrupted you.
It's funny. The most basic part of retirement, which is Social Security, is so complex, and so
Yeah.
it
Yeah.
people think it's easy, but it's not an easy decision, and there are mistakes that can be made, and there are ways to maximize what you're getting out of it. And so, even it's great to ask questions.
And it's very individualized.
Mhm.
That's the key, because if you read the latest post and say, oh, okay, that's what I should do, that's probably wrong.
Yeah.
Because it really depends on your individual circumstances. Are you married? How's your health? How long have you worked? Where'd you know what I'm saying? What kind of earnings? What's your age now? There's just so many factors, and it's just so individualized that you can't. I don't think you can just read read an article
Right.
and say, okay, well, this is what I should do. You really have to test it. That's really the best way to do it.
Isn't that true with everything? I mean, I know a lot of people who are financially savvy, read a lot of articles and things like that, but so much is tailored to your specific situations and your needs, and there are many factors involved, so it's difficult. You can read articles and take advice and learn, but really you have to vet your individual decisions for your individual situation.
Yep. Hey, so as I mentioned before, I saw this chart that's up on the screen now. And it's about the travel industry. It's year over year, 2019 to 2020, and it's specific to the travel industry. And we all know what happened with COVID-19, right? People stopped getting on planes. They didn't want to get on trains. They just said, "That's it." Certainly, I got to get on a boat. In fact, the whole cruise industry was basically shut down. And so a couple of pieces of economic data here. So the travel industry's U.S. total economic output plummeted 42% in 2020. 65% of all jobs lost in the United States were in the travel industry. Did you know that?
No, I did not.
Yeah. The hardest hit areas were business travel, particularly spending related to conferences, conventions, trade shows, as well as international travel.
Yep.
But one of the casualties or the consequences of that decline was the hit to federal, state, local governments in terms of the travel-related taxes.
Sure. Yeah.
Like New Hampshire, for example, which doesn't have a sales tax, but they have a significant meals tax. They have a significant
probably
tax on
hotel taxes.
Hotel tax. Yeah, exactly. Yeah. Rental cars in New Hampshire. This is a significant hit, or a significant tax on rental cars.
Another industry that took a huge hit, by the way, for a number of different reasons. But
and so those travel-related taxes were down by 34%.
Wow.
So maybe in New York that's not a big deal because they have an income tax, but certainly in New Hampshire, that's a big deal. And so total travel spending in the United States, accounting for both domestic and international, is expected to rise about 24% in 2021.
Mm-hmm.
So I got to thinking about it, and I said, geez, I wonder if there might be an opportunity, maybe. And let me just say that typically I don't suggest or recommend that you try to invest in a particular, figure out what sector of the economy is going to do better than the other. I leave that to the pros that do that sort of thing all day long. And I would not usually recommend or even ask you to consider trying to figure out which sector is the best to be in at any given point in time. But I saw this chart and I said, well, geez, maybe there's an investment opportunity there, right?
Yeah.
Airlines, for example, might be an opportunity. Hotels, perhaps, because with this kind of decline, even though we've come back, I don't think we're back to where we were. In fact, when you look at the numbers that I just quoted, there's even if it grows at the expected rate, it's not going to come back totally in 2021.
Right.
So there must be an opportunity, right? So I took a look at travel and leisure as a potential investment opportunity.
Mhm.
And so the numbers really aren't important here. What's important is the chart itself.
Yeah.
And I don't know if you can see that, but you can see where it hit rock bottom. It just fell off a cliff in 2020, right? But take a look at where we are today in
It's up-
this travel and leisure index as
It's up
compared.
above pre-pandemic.
Yes. Yes. So intuitively, you might say, "Hey, look, travel and leisure. Maybe I should take a look at that. Maybe I should be buying, some of the airlines. Maybe I should be looking at some hotel chains. Maybe that'd be a good investment." But when you take a look at the overall sector, the overall industry, travel and leisure combined, we're above where we were. I mean, we're at all-time highs.
Yeah.
According to this.
Well,
So-
they've had the leisure industry has had to work very hard. They have a lot of capital invested. They have had to work very hard to draw people back in. So it's been prices has been low on a lot of these things. You can find bargains, and that's what's drawing people back in.
Customers, you mean?
Yeah.
I agree completely. And Lou, I guess what I'm saying is that, and I
That's
don't
why
know.
that's why it's above pre-pandemic levels, is because it's extremely affordable right now. If you're willing to take the trip, it's
But
relatively affordable.
But still, there's still vacancies, right?
Yeah.
There's still the business has not recovered in full.
No.
But the markets have anticipated that potential to the point where we're back above where we were in 2020 before the pandemic.
Right.
And so I was thinking about that, and I'm saying, I think this is illustrative of where we are in the markets, generally speaking. And that's not true of every sector of the economy, what's going on in travel and leisure. But I think just generally speaking, it looks to me like there's just all this money that is just going into the markets and buying. I'm not going to say irrational exuberance, but
How about anticipatory exuberance?
again, a stock market is forward looking,
Yeah.
always looking 6 months to a year out. Got that, understand that. But all things considered, the potential, I mean, we if you look at the tail end of that chart, you can see it's come down a bit as the Delta variant has started to circulate here in the United States and elsewhere. So, we have seen a little bit of a decline, but I wouldn't have expected. I was actually shocked to see this number, and it leads me to conclude that this is probably more of a stock picker's market at this point in time, because if you're taking new money and you're investing at these levels, there's a possibility there's a lot of downside risk. And so you want to be very careful about how you position your assets over the next few months, over the next year or so. And make sure you're diversified. Make sure you know what you're investing in. And to the extent that you can do the homework, or you can hire somebody that can do the job for you, you might want to consider taking a look at individual securities, because there's probably some good opportunities out there other than the indexes, individual stocks that still haven't come back for whatever reason, and could create some value for you in the short term, and maybe even a long term if you hit it at the right time. And I would add, you want to stay diversified, not just between the common asset classes like stocks and bonds, but looking at alternative investments as well, and maybe alternative strategies. I think that's where you need to be in this particular market. It's just my opinion. I could be totally wrong.
We talked a couple of weeks ago about dollar cost averaging, and instead of jumping into an individual asset like this, whether it be a travel asset or whatever you think the bargain is at this particular time while you're
Yep.
picking stocks,
Yep.
it's important not to just to jump in fully, right?
Right. I agree. Yeah, that is absolutely my opinion right now. In fact, get some clients with some cash, with some new money, and hey, look, here's my strategy. Here's what I think we should do, but I don't want to commit this all at once. We really need to stretch this out over a period of time and take advantage of dollar cost averaging. And if you want to know what dollar cost averaging is, there is a show that we did specifically about dollar cost averaging, and you can find it in the library.
Yep.
As well as a lot of other topics that we've discussed, including Medicare, Social Security, taxes, college funding.
Essentially, buying in all at once is like spinning the wheel, isn't it? Whether you're going to get a good price or not, especially here in this particular example in the travel industry, where there were some valleys and there were some peaks, and if you just bought in at the wrong time.
Yeah, I mean there are times where that is probably the best approach when you're at or near a bottom.
Yeah, in hindsight,
in the market, right?
In
of
hindsight,
course,
there's an obvious place to spend all your money, but we don't have the benefit of hindsight when we're actually making the purchase.
Right, absolutely, and that's where dollar cost averaging can help you avoid getting in at the worst possible time. Absolutely, along with some other strategies as well. Yeah. Hey, so today's this week's Talk Money tip is about taxes, and it's about like-kind exchanges, and it is a way that you can divest yourself of an investment asset, business. Let's call it a business asset, without actually creating a taxable event.
Okay, like a rollover.
It's like it would be like a rollover for IRA, for retirement accounts.
Yeah.
Yes, that's a good way to describe it. Although that's not exactly what it is.
Yeah.
But it was curtailed as a result of the Tax Cuts and Jobs Act of 2018. It took me a while to memorize that one.
Tax reform.
So it's kind of limited, but it's still an opportunity for some people, and I want to discuss that in more detail. But let's take a short break, and we'll do that when we come back.
Whether you're saving money for your children's education, preparing for retirement, or deciding on the right life insurance plan, you can count on the professionals at Andover Advisory Group. Established in 1996, our company is responsible for providing financial planning services to individuals seeking sound financial advice. We create a comprehensive financial plan that serves as a framework for organizing the pieces of your financial life so that you can focus on your goals and understand what it takes to reach them. And a financial plan can help you prioritize. For example, how saving for college might impact your ability to save for your retirement. Having a clear perspective will allow you to pick the right strategies and confidently choose suitable products and services. Best of all, you'll have the peace of mind that comes from knowing that your financial life is on track. Call us at 978-691-5005 to book your free initial consultation. That's 978-691-5005. Hi, this is Jeffrey Shank, a chartered financial consultant and the host of the Talk Money Show. I've been helping my clients for more than 30 years, and now I'm going to help you. Join us to learn about the financial issues that concern you the most. We'll hear from the experts on a range of topics, get some great ideas, and it's all designed to help you make more out of your money. So tune in to Talk Money right here on Eagle News Radio.
Hey, welcome back to Talk Money. And this week's Talk Money tip, it's on like-kind exchanges. And Lou, this is the way it used to work. I want to make that very clear. This is the way it used to work. So let's say that you're in business, you own a truck.
Yep.
Right? And you use that truck for business, and you've depreciated it, and now you're thinking, I need another truck. And so because you may have depreciated to the point where it's actually, the value is actually higher than the value after depreciation,
Mhm.
if you sell that truck, you might have to pay taxes on the gain.
Okay.
Okay. In some cases, you may have depreciated because of bonus depreciation incentives to businesses as part of the financial crisis that we've had over the last several years. There's all this depreciation that allows you maybe to depreciate most or all of it in a couple of years, and so you may have depreciated it down to zero. Now it's still worth, especially a truck, right? $20,000, and so you'd have to pay taxes on the difference between the cost basis now of zero and $20,000. And so what you used to be able to do is you used to be able to do a like-kind exchange, and you could buy a replacement truck. So you go to the dealer and you'd trade in your old truck and you buy a replacement vehicle, and as long as the cost of that replacement vehicle is more than the value of the truck that you turned in, well,
Right.
then you could postpone recognizing any gain on that transaction. Like-kind exchange. So it's like-kind property. So you used to be able to exchange property of like kind and not have to declare any sort of, you don't have to recognize that transaction. You could defer any gain into the new property that you exchanged it for.
Let me guess. The IRS is frowning on deferment now.
Well, it was all part of the Trump era Tax Cuts and Jobs Act, which eliminated the like-kind exchange for most business property. The one that remains is real estate.
Oh, fair enough.
Now, real estate, unlike a truck, doesn't typically depreciate overall in market value, although you're still able to depreciate the structures that are on that property that you own, right? And
Right.
so you can see that somebody who is an investor in real estate that's investing in rental properties could potentially have a significant gain, a significant taxable gain, if they were just to sell one property, even if they wanted to sell one and buy another one.
Right.
If they don't take advantage of like-kind exchange, they would potentially have to pay a lot of taxes on that gain. And so this is from the IRS, effective January 1st, 2018. Exchanges of personal intangible property such as machinery, equipment, vehicles, artwork, collectibles, patents, other intellectual property generally do not qualify for non-recognition of gain or loss as a like-kind exchange.
Okay.
Like-kind exchange treatment now applies only to exchanges of real property that is held for use in a trade or business or for investment. Real property, also called real estate, includes land, generally anything built on or attached to it. An exchange of real property held primarily for sale doesn't qualify. It never did. So if you're buying it for investment purposes and it's not a business, in other words, it's not rental property, then it doesn't qualify as like-kind exchange, and it really never did.
Right.
Okay. There is a transition rule for certain people who had property that's excluded now, but had sold it prior to the effective date of the new rules, right?
Yep.
And so this creates or still gives the person who is investing in real estate the opportunity to defer that gain by doing a like-kind exchange. So anybody that's investing in real estate really needs to understand these rules. And it is, as you can imagine, kind of complex in some aspects of it. And there are very specific things that you have to do. In other words, you can't put the property for sale, sell it, and then find another property a couple months later and buy it and say, oh, I did a like-kind exchange. That's not the way it works. Really, in the case of real estate, you're really swapping at the if you look at
So it has to be timed
pure,
specifically.
well, if you look at the pure definition of a like kind exchange, you're swapping one property for another, like in the case of the truck where you turned it in, right? And then they bought it from you and they gave you another truck. Well, that was like kind of exchange because you were getting a truck for a truck, right?
Yep.
So, but most people don't sell their real estate to the person who they're going to buy the replacement property from.
Yeah, there's no trade-in value.
There's no trade-in. There's no, right, and it's not a trade-in scenario, right? So what you have to do is you need to have this fairly complex transaction where you employ a third party who effectively takes possession of both properties.
Oh,
at the time you do the transaction.
You essentially escrow it.
You essentially escrow it. That's
Yeah.
correct. Yeah. And
Interesting.
so there's companies out there that do this. That's their business. They're very good at it. You want to be very careful about who you decide to hire, because there have been stories about people who have taken that escrow, Lou.
Yeah. Really?
Oh yeah.
Yeah. Wow.
So you want to be very, very careful about who you employ if you get involved in a like kind exchange of real estate. But it's still
a little. Yeah.
I'm sorry.
That's going to sting a little.
But there's still, under the new law, there still is this possibility. But as I was researching this, you probably won't be surprised to learn that the Biden administration has a like kind exchange for real estate as a target for elimination.
I would imagine.
Yeah.
I know the answer to this, but I'm going to ask it anyway, because there are people who have investment property as they approach retirement. They want to get out of it. They don't want to deal with their tenants anymore.
Right.
And so a like kind of exchange of divesting that investment property, yet putting it into an investment, a real estate investment type of situation where you don't actually own the property, that wouldn't work in this situation.
So I'm glad you asked that question.
Yeah.
Because there is, through again, the right approach, there is a way where you can actually do a like kind of exchange of your apartment building to a portfolio of real estate and take advantage of like kind of exchange.
Oh, interesting.
It is possible. Don't do this. Don't try to do this by yourself.
Right.
If you'd like more information about that, I'd be glad to discuss that with you.
Because there are plenty of real estate opportunities that don't involve you actually owning the property. It's more of an investment situation.
Passive,
yeah.
A more passive approach.
Yeah.
Yes. It is still a possibility under the current rules.
Mm-hmm.
You do have to do your homework, and you again, just like hiring a 1031. It's Section 1031, by the way. Hiring a third party who is a qualified intermediary. You want to be very sure about the people that you are working with that are offering that type of an investment. But it can be done.
Yeah.
Make sure you do your homework and don't just jump into it. But you can't ignore it, especially if, based on what's happened to the real estate market in the last few years. There's huge gains that have been built up, and let's say that you're getting close to your retirement, and your Medicare age, and you're starting to sell these properties. It's possible that you could end up paying a lot more in taxes and a lot more in Medicare premiums, because, believe it or not, Medicare premiums are means tested.
Interesting. Yeah. And that would show up on your income. Yeah.
Yes. Yeah. So there's a lot of reasons. And the fact is that under current rules, if you were to defer using a like kind exchange, that gain, and eventually pass that on to your kids through inheritance, because of a step up in basis, they don't have to pay taxes on it. So you could avoid paying taxes altogether, capital gains taxes.
And now's the time to be exploring these situations, because the tax situation, deferment of taxes is a
Yep.
less viable option now, because taxes are just going up. This is a tax sale period, don't you think, in most cases?
So yeah, I agree with you that there's been a lot more talk, and there almost seems to be this people are resigned to the fact that taxes are going up.
Yeah.
As a result of all the deficit spending that we've been doing.
Yeah.
And I think to a certain extent, conservatives, although they wouldn't like to see that happen, probably as long as they're in the minority, and they can blame the other party for any increases, they're probably willing to say, okay, we'll let it happen.
But in many of these cases, a lot of people are avoiding the tax hit, and they're doing it by deferring the problem, and the problem is just going to get worse as you go forward.
Oh, I see what you're saying.
Now's the time to stand up to this tax hit, whether it be this program, which allows you to avoid it, or sometimes a rollover where you actually take the tax hit now as opposed to taking a bigger tax hit.
I thought you were saying that
I was,
that there's a possibility that this could go away, or that taxes could be a lot higher in the near future, and I think that that's true as well. So, yeah. So that's this week's Talk Money tip. There's still ways that you can save some money on taxes. So that's something that you like to explore a little bit further. Because of your situation, be glad to talk to you about it. Remember to get in touch with me after the show. Just dial the toll-free number 877-475-2062. Send me an email, jeff@talkmoneyradio.com, or you can just send us a private message on the Facebook page. Happy to talk to you about it. Looks like our time is up, Lou.
Yes, sir.
We'll be back next week, same time here on Talk Money. In the meantime, please remember, good sound advice is way better than advice that purely sounds good. Thanks, Lou.